The South African pension system is composed of a non-contributory, means-tested public benefit programme, various pension and provident fund arrangements and voluntary savings. But with 90% of pensioners retiring with inadequate income, the country still has a long way to go. Joining me is Visser and Grange from Sentinel Retirement Fund. So Andre, let's start with you. And research shows that only 6 out of 100 South Africans have money put away for retirement. Do you think this is an accurate picture?
It is. South Africa has a two-tier system in which employed people do have pensions and do participate in pension schemes and in provident schemes. But there's a whole lot of people who are not formally employed, who falls outside the formal savings and retirement industry network.
So Andre, what happens if people don't have adequate funds put away?
Well, they become destitute, and the state and the taxpayer in South Africa then have to look after them or cater for them, and you get an allocation of state funds to support them, and they become obviously the responsibility, both in terms of health and insurance and old age and so on, of the government.
Well, how advanced would you say the pension system is then in South Africa?
You deal with a two-tiered system. The one is pretty advanced and competitive internationally and best of breed. And the other one is obviously a concern to everybody. There's reforms on the go at the moment where National Treasury in South Africa is seeking to establish a savings and retirement fund that's compulsory for everybody and would provide that kind of cover. But I do think a part of the population, like you said, is not properly catered for.
Well, Eric, over to you now. And how does Sentinel fit into this picture then?
Well, Sentinel is part of the formal sector, where employers on a compulsory basis in negotiations with employees provide them with a pension benefit. And Sentinel was created in 1946 specifically for the mining industry. And today we have 100 participating employers, 58,000 active members and 43,000 pensioners. And, it is a defined contribution scheme. So it's a money accumulation scheme where people save for their retirement.
Well, as you just illustrated, Sentinel is obviously one of the most popular retirement funds in South Africa. Why do you think this is?
We cater for in-house administration. It's specifically around the mining industry it was created. And as I said, it's a DC fund that we run. We use best-of-breed systems, and we allow members to exercise choice in where they want to invest. Obviously, you need to create the portfolios for them, and that's exactly what we've done.
In 2013, you merged with the Mine Employers Pension Fund. What benefits did this bring?
Obviously, the benefits are economies of scale, better economies of scale, and being in-house run, there's no profit motive or anything. All the benefits go directly to the members. I think it's also part of what's happening in retirement reform in South Africa. We sit with a lot of small funds. And Treasury is encouraging more bigger funds. And we had to position ourselves to be one of the players going forward.
So what do you have in place to mitigate risk?
First of all, we work on a liability-driven investment approach. We do an annual asset liability modeling, and we project the cash flows that we need not only for pensioners but also for our active members. And from that, we derive a risk budget where we can decide what are the asset classes that we need to invest in, the geographies and the sectors and all of that. And then we create risk profile portfolios for people where you get high exposure to, for instance, equities and less exposure for your other portfolios. And this all hangs under this multi-manager asset management approach that we've got.
So finally, what's in the pipeline for 2014?
We've opened the fund for other sectors beyond the mining industry to join us as well as participants. And I think that's a very exciting period that we go in, especially taken that, there's no profit motive. So it's an economies of scale game. The more members we get on board, the less the cost for the members that are in the fund.
Eric, Andre, thank you.
Thank you, Jenny.
Thanks, Jenny. Thank you.